This is Mark the Meerkat in with FreeOnlineTradingEducation.com, brought to you by Grok Trade, where I'm an analyst, host of the Grok Star Trading Room, and perhaps your future mentor. Hey, here's a trade that we had this morning in the Grok Star Room, and it was on HAINs. That's right, HAIN. And they decided they were not going to do their earnings, and kabam! Oh my, down over 25% at opening here. And then it was ran up, made some money there, and it was coming back and forth here, getting tighter and tighter, what we call a descending triangle, which is bearish. You want to know more about that, just go to our site, FreeOnlineTradingEducation.com. That's right. And go to Chart School. You always want to know about that. Now, it's a bearish pattern. We're going to look for descending triangle, which is right here. We click on that, and here it is. It has a line of support. Well, in this case was 38.50, and it's getting tighter and tighter and tighter like a coiled spring. And if this sucker breaks below that line, we want to be short because the odds are in our favor. Read about it here. Here's some examples. Here's some daily charts where that has happened before. Here's two day trading charts, 1 minute charts where it fell down after it was in a descending triangle situation. So let's take a look at it here on HAINs. And it is, again, right here, this 38.50. Look at it, hit it perfectly there, coming down, and then right at that level again. So I set a trade. If it broke down below there, I want it to be short. Sure enough, what happened? Bam, there it goes. And I am now short at $38.36. I am short, HAIN. Okay, I'm going to set a stop up here above these moving averages right up here, a little less than 1%. Let's see what happens next here. Bam, 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 right down here to the even dollar amount here at $38. All right, so, and it slipped below there, became right back up here to 38, so that's acting as a line of support. Bringing my stop down here to break even right now because it's at the even dollar amount. Let's see how it goes from here. So a no risk in this trade. Love it when that happens. Low basing below the $38. So I'm bringing my stop down. I'm going to follow this 20 moving average, this green line down on this 1 minute chart. And here it goes, following that down, following it, bringing my stop down, bringing my stop down. And is it going to fall down further? Oh, no, ran up here and stopped me out right here at $38.18. So let's take a look at this whole trade here. Descending triangle. When it broke down, I got short. And then it fell down below this 38 even dollar amount with support and resistance. It was acting as resistance. And then it finally broke out. And I got out at 0.4% in 19 minutes. Now, this wasn't the biggest trade of the day, but folks in the room thought this had a nice lesson to it. Because one thing I want to show you is that when it broke down here, what happened to volume? Kaboom! Look at the volume increasing as it fell down here. So the lesson for the day about this one is that volume confirms what's going on in price action. I'll say that again. Volume confirms what goes on in price action. So this move to the downside with increasing volume was very, very bearish. Ended up not making a ton of money on it, but the principle is there. If we have this built into our trading rules, we know over time we're going to make more money than we spend. This is Mark the Meerkat. Trade well.